what these older people have to understand is how the system has scammed them. These insiders on Wall Street have set it up to make sure that it's heads they win, tails we all lose.
Mr. Dalio's risk parity model stopped working and he got blown out of the friggin' water. Okay, so he had to change that risk parity model. He doesn't want Bitcoin to succeed because he can't employ it in his risk parity strategy.
Hey guys, welcome back to Let's Talk Crypto. In today's video, Greg Foss and Lawrence Lepard join the blue-collar Bitcoin for an uncensored discussion. This discussion focuses on explaining Bitcoin to the boomer generation, while criticizing some public figures who appear insincere in their evaluation of this asset. They advise not to follow the opinions of those who don't understand Bitcoin, even if they achieved success by exploiting the corrupt traditional monetary system. The present times are digital, and investments must be made accordingly. Therefore, it's necessary to switch up your investment strategy in response to these changes. Foss argued that in times of inflation, Bitcoin acts as a hedge against monetary devaluation and is the exemplary investment opportunity he has seen in his career. Greg is of the opinion that investing in Bitcoin is crucial and has even provided his personal Bitcoin price target. He suggests allocating a portion of your portfolio to it. Let's listen to Greg Foss and Larry Lepard as they provide valuable advice to individuals planning to invest in the digital age, particularly boomers. But before we do, please consider subscribing to our channel, as we bring you daily content on the latest crypto news. And now, let's jump right into the video.
When you have heart problems, do you try and do open heart surgery on yourself, or do you go to a professional? Obviously, you go to a professional heart surgeon. Well, Larry and I have both been in the risk management business our entire lives, okay? 30 plus years, each of us. So we might not be the smartest or the sharpest tool in the shed, but we have experience in identifying opportunities. So think of me as a heart surgeon, but I'm a financial engineer or a financial risk manager. And you can take this for what it's worth. I have never seen a risk reward opportunity better than Bitcoin. You can own 2% of your entire net worth in Bitcoin, and that can be a life-changing decision. If you lose that 2%, I'm pretty sure it shouldn't change your life. But if that 2% turns into something that I believe to be the best, most likely outcome I have ever seen in 35 years of managing risk, it is life-changing.
I completely agree with Greg. You know, look, it is a technology. It is an important technological development. I think it's one of the most important technological developments the last 100 years. We created a system which provides immutable digital scarcity. And that in and of itself is a big deal. It's enormous. And so, you know, just because you're old doesn't mean you can't learn. And just because you're old doesn't mean you shouldn't investigate. And so what you need to do for these older people, what you need to say is, look, you know, we're not sure we're right, but, you know, as Greg points out, if you take a 1% allocation of your net worth and put it into Bitcoin and you lose it, your life isn't going to change. If you take a 1% of your net worth and put it into Bitcoin and it goes up 200x, which I think it will, you know, that's going to change your life. And so, you know, why don't you consider taking a 1% weighting in this? Why don't you consider at least doing the work, which is something that even I think, you know, some people say Ray Dalio understands it, and he's just shilling for the system. I don't think so. I met him once. I actually don't think he's as smart as everybody thinks he is. I know that's a very arrogant statement to make, but I, you know, I don't know. I'm a judge of people, and my sense is he really doesn't understand what it is. You know, monetary systems are programmed to debase, as Greg says. Bitcoin and gold are your protection.
In fact, unless they forgave the accumulated debt in the world already, which would mean pension plans that own all of this debt have to write it down to zero, and therefore pensioners' pensions have been compromised. Even if the government's balanced the budget for the rest of time, it's still over, Lar. It's still over.
Look, the people who run the fiat system are, in my view, evil people who have a very strong economic incentive to keep that system going. And they are going to throw sand in our face at every possible chance. And yet, you know, they're going to lose because people, I mean, you can't stop an idea whose time has come. I mean, Dalio I mean, I have some respect for Dalio. I have no respect for Munger. I actually think Munger is a legitimately evil guy. It literally threatens their existence, and they know it. I mean, they're not.
Exactly.
They're both very smart men, okay? I mean, I recently in a tweet said he's stupid because he is with respect to Bitcoin. I mean, he's not a stupid man. I mean, he's made billions of dollars. But he's done it in my opinion, an unethical way by gaming a fiat system. They both have. I mean, when you look at people's politics, there's a spectrum from hardcore statism, fascism on one end, and radical, libertarianism on the other end. And Munger is way, way, way over on the statism side, right? And he admires China because they have the power to do. I mean, he's one of those people who thinks that certain people are better than others, and therefore they ought to have a larger say in how the world is run. I mean, this is the WEF. I mean, he would fit right in at the WEF. All these people actually think they're in a position to say how the world should be run and that we should all listen to them. And, my view on that is I'm not listening to you. You don't know how the world should be run. Free individuals are what created this world. As some of the founders predicted, there are people who figured out how to play the game. I mean, my view is the role of government should be to be basically a fair referee and nothing more. Enforce the laws, run the courts. That's it. But Munger doesn't see it that way, and Dalio is a more complicated case. I mean, Dalio is a gold bug. I mean, Dalio sees the monetary debasement. Munger does too. Oh, yeah. He just doesn't admit it. He likes it because it benefits him. So.
Let's talk about Ray Dalio and what he exploited, because the system offered that to him. Mr. Dalio created a ingenious investment portfolio called risk parity. Okay, and basically risk parity involved two major asset classes: equities and bonds. But it also started with bonds that I mentioned earlier in the show. 40 years ago, had close to a 20% yield. And the risk parity portfolio that Mr. Dalio constructed was he had equities, and then he had a leveraged position in bonds, which neutralized any volatility, because when equities sold off, people tended to run to bonds as the safety trade. Well, if you're levered long bonds and you have equities, and equities fall, but you have a heavier position in bonds due to leverage, and they go up in price because of demand, i.e. interest rates went lower, the volatility of your portfolio was neutralized and your performance was exceptional. Now, the key is to remember that Mr. Dalio started when interest rates were close to 20%, and they went all the way down to under 1%. Risk parity does not work when interest rates are at 1%. Unless interest rates were to go to negative 5%, which is asinine, the point is Mr. Dalio's risk parity model stopped working, and he got blown out of the friggin' water, okay? So he had to change that risk parity model. You can actually put more than a couple of assets into a risk parity model. And I think Ray understands that gold and Bitcoin belong in a risk parity model. The problem with Bitcoin is it's too small for the world's largest hedge fund. The market value of Bitcoin means that if he was to go in and out like an elephant, he would squash everybody. It would be like a gorilla eating a banana. And all of a sudden, every monkey in the world is getting squished out because there's a gorilla in the room. So he doesn't want Bitcoin to succeed because he can't employ it in his risk parity strategy.
According to Foss and Lepard, Ray Dalio and Charlie Munger have become successful by exploiting the flawed fiat system. They have managed to capitalize on it, leading them to success. The unfairness of this system cannot be overstated. People with inside information, like Dalio and Munger, are in control of the majority of the funds. It can be said that it is almost impossible to win through this rigging. The whole system has been designed to scam innocent people and leave them disadvantaged.
One of the things that's absolutely critical to making this risk parity game work is bailouts. I mean, what these older people have to understand is how the system has scammed them. Okay, it has scammed them. These insiders on Wall Street have set it up to make sure that it's heads they win, tails we all lose. I mean, the 2008 crime was an enormous, enormous crime. I mean, we are all paying for their being bailed out. I mean, they had a system set up where they could lever themselves 100 or 1,000 to 1 and make enormous amounts of money. I mean, guys making 50, 100, $200 million a year as a result of the leverage they used in that system, which was extremely risky, which when it failed and the housing market collapsed, should have, I mean, Blankfein, all these guys, they all should have been BK, but they didn't, okay? Because these guys had the political power to get the bailouts that allowed them to go on and then to do it again. And Dalio has had those swap lines, and Ken Griffin has had those swap lines. And the reason for that is because of fiat and the way that fiat has basically drained all the rewards and put them in the top of the system and left nothing for the average working person.
Yeah.
And it's criminal. It's a broken system. Just say to yourself, okay, the system's broken. How do I fix it? Well, we gotta crash the system. And to crash the system, we got to have fiat fail. And fiat's in the process of failing. But if you want to silently protest fiat, there are two ways you do it. You get out of the fiat game. You buy gold or you buy Bitcoin. You don't let them have your money. And you vote with your feet. And as more and more of us vote with our feet, we've got them outnumbered. I mean, sure, these people at the top of the system, they control everything, but they don't control what the average person does with their own money. And they want to. They're going to try and give you a CBDC. You're not going to use it. You're going to tell them to go screw themselves, right? But in turn, you know, if you take your piece of your savings and you put them in Bitcoin, that is a protest in and of itself. And I think, sadly, not enough people understand that's what they're doing when they're investing in Bitcoin. Let's not forget, you can say whatever you want about Bitcoin. Bitcoin has been the best performing financial asset in the history of the world ever. Ever. At $16,000. I mean, Bitcoin went from pennies to 16 to 23,000, wherever it is today, 24,000 a coin. There is no, in that time frame, there is no financial, and actually in any time frame, there is no financial asset that has ever exceeded that performance. And I can't see why, you know, in the venture business, I used to always say, are the dogs eating the food? I mean, a trend in motion will continue. I can't see why that trend isn't going to continue. I mean, I think it will continue to be, I think the price of everything is going to go down in Bitcoin terms from now until forever, because there are 21 million of these coins and there are 8 billion people.
It's time to explore their views on Bitcoin pricing and the current market action. What do they think about the future of this popular cryptocurrency?
I think that the odds are that the bottom was in at the 15, 16 level, but I would rate that as maybe a 60% chance and a 40% chance that we have one more big scare. I would revise that. I'd probably say it's 70 or 80% that the bottom is in. The retracement was not quite a Fibonacci 78%. It was close. A Fibonacci 78% would have taken you to 13, and we didn't quite get there. But and so, you know, I'm entirely prepared for one more dip down into the 13 range. If Bitcoin goes below 13, I'd be shocked. I think they're starting to smell the next level of debasement, and so I think there are high odds that the bottom is in, and that, you know, we'll be at much higher numbers not that far out. How do you see it, Greg?
So I have a price target on Bitcoin of over $2 million US per Bitcoin. How did I get to $2 million per Bitcoin? And I'll start with my famous $900 trillion of global financial assets, at which I think Bitcoin will ultimately attain a 5% market share. 5% of 900 trillion is 45 trillion. I know you boomers can do this math, so stick with me. 5% of 900 trillion is 45 trillion divided by 21 million Bitcoin that will ever exist. There's your $2 million plus dollars per Bitcoin in today's dollars, because global financial assets today are $900 trillion, but debt is growing, and as debt grows, other things grow, and that global pie gets bigger. So this is stupid cheap at this price, and you have to own some. I'm not saying don't own other hard assets. What I am saying is be very careful owning bonds and fixed income in a debasing. So bonds are the largest asset in the world, or debt is the largest asset in globally. It's where you should take your allocation from and put it into. So if you have exposure to bonds, take a small percentage of your bond exposure and put it into Bitcoin. So don't trade your fire insurance. Bitcoin is fire insurance on fiat. And fiat is a piece of shit that is programmed to debase. And if you don't have insurance on that piece of shit, you shouldn't be managing your own money. Do your homework.
Anybody who is fighting hard to bring sound money in the form of Bitcoin, gold, etc., into the world is, in my view, working to make the world a better place. The world is extremely broken right now. I mean, we can all look around and see that. And given that the world is broken, you know, my view is we're all called upon to stand up and try and fix it. And it's not about some red-blue fight. That's all just noise. You know, this is the base layer. If we get the base layer right, if we get money right, if we get sound money right, a lot of the other problems in the world that we're having are going to disappear. And so to me, this is a more important fight than any other fight we're having right now.
What are your thoughts on Foss and Lepard's investment advice in the digital era? Let us know in the comments below. If you enjoyed this video, please make sure to give us a like and subscribe. Thank you so much for watching. This is Let's Talk Crypto, and we'll see you in the next video.